Hello students and welcome to the lecture. So students, in this lecture, as you can see that basically we are going to start our discussion over the two important things. The first is the types of banking we are going to discuss. Another one is types of banks. Okay. These two things we are going to discuss. Okay. So the first question that will comes in your mind is that, okay, one thing is it is part one. All right. So the first question that will come in your mind is that what is the difference between the types of banking and the types of banks? Are they different? Are they same? That is what we have to find out before we dive deep into this. So let me clarify it for you. When we talk about the banking, basically we're talking about the activity of banking. Okay, like what does the bank do actually? When we talk about the banks, we're talking about the particular organization. All right. So you can say, suppose there are two banks, X bank and Y bank. So these are the types of bank, whether private bank, public bank and all. Then banking, like you can say X bank is involving in merchant banking, whereas Y bank is only the corporate bank. It is only doing a cooperative banking. So now I hope little bit it is clear in your mind. Banking is a different activity. That is the activity being performed by the banks. Banks are the total different institution and organization. Got it? Here in this lecture, we are going to start with the para banking, then narrow banking, then offshore banking, then green banking, then retail banking, then wholesale banking, then universal banking, then Islamic banking, merchant banking, then types of banks in India, scheduled and non-scheduled banks, commercial banks. Thereafter, types of scheduled commercial banks, development banks, cooperative banks, specialized bank, and at last we will discuss the summary of all these things. Okay. But before, as usual, before starting, we have a small disclaimer presented over here. The disclaimer is like that. The images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this deck and have any concerns or issues, then please contact us at sathee@iitk.ac.in and we shall remove the images. Okay. Now let's begin with the topic. So first thing in the types of banking we are going to discuss is the para banking. Okay. So we can say banks could undertake certain eligible financial services. Therefore, the para banking activities either departmentally or by setting up their subsidiaries. Okay. Like you can say instead of applying the entire things of the banking services, they are undertaking certain eligible financial services only. Therefore, it is known as the para banking activities. The banks could form a subsidiary company for undertaking the types of business which a banking company is otherwise permitted to undertake with prior approval of Reserve Bank of India. Got it? Then subsidiaries company and different para banking activities. Now let's have a look on this. Under the provisions of Section 19 first of the Banking Regulation Act 1949, Banks may form subsidiary companies for undertaking types of banking business. Prior approval of the Reserve Bank of India should be taken by a bank to set up a subsidiary company. Then only the bank could establish a subsidiary company. Without obtaining a prior approval from the Reserve Bank of India, no bank is permitted to set up their subsidiary company. Banks could form subsidiary companies for undertaking equipment leasing, hire purchase business, and factoring services. Banks could also undertake equipment leasing, hire purchase, and factoring services departmentally. Mutual fund business, credit card and smart and debit card business. Thereafter, money market mutual funds, known as a triple MFS. Banks could set up this after the approval from the Reserve Bank of India. Entry of banks into the insurance business. Okay. Underwriting of corporate shares and the debentures. Underwriting of bonds of public sector undertakings. And RBI observed that some banks and their subsidiaries, they were providing the buyback facilities under the name of safety net schemes. Like what is the buyback? Buyback is, you can say, under such schemes, large exposures are assumed by way of commitments to buy the related securities from the original investors at any time during a stipulated period at a price determined at the time of issue, irrespective of the prevailing market price. Like you can say, if someone purchased some security from the bank, okay, and the bank provided the safety net scheme, which means buyback. So you can say at the time of purchase, the price of the security was 10 lakh rupees. The bank said, if you want to return it, if you want to sell the security, then you could sell the security to the bank itself. Then they will charge rupees 12 lakhs. It means the bank will give rupees 12 lakhs in order to buy back the security. That is known as the safety net scheme. Like the investor is not required to worried about to whom the security is to be sold after purchasing. The bank will be the one who will buy the security from the investors again at the predetermined price. Whether the price is high or low from the prevailing market price doesn't matter. Okay, that will be sell off to the bank again on the defined price. Then narrow banking. Narrow banks are generally the safe banks. By not lending and using their deposits to buy government bonds, they carry virtually no credit risk. There is no danger of non-performing loans and frequent injections of equity capital that has to be funded by the taxpayers. Now, narrow banking. Therefore, the banks that place funds only in the risk-like securities. The main thinking that goes behind for this is that since the investment is mainly in the risk-less securities, they will not fall. Like you can say, narrow banking is a type of banking in which the bank follows the prudent approach or cautious approach. Like they're not buying the securities which are generating the higher returns but risky. Instead of this, they may place their funds in the securities which may not generate that much of high returns but are riskless or risk free. The main thinking of banks is goes behind that they made the investment in mainly the risk-like securities so that they should not fall. Okay. The Tarpur committee basically gave the recommendation to convert the weak banks into the narrow banks. Now you can say the banks which not having that much of amount to got deposited and all. These weak banks must turn into the narrow banks over the period of time. This committee has purposed that the incremental resources of these narrow banks should be restricted only to the investments in the government securities. Like the government securities may not be that much of attractive for some if person is assuming for higher returns. But the one thing that is here is that the government securities are always the risk-less securities. which means the government securities does not have any kind of risk. It is riskless securities. Okay? Because the government will not default on its payment. Now, another one is our offshore banking. Offshore banking unit means a branch of a bank in India located in the Special Economic Zone SEZ and holds an authorization issued under the Clause A of subsection 1 of the Section 23 of the Banking Regulation Act 1949, 10 of 1949. An offshore banking unit OBU is a financial service unit, normally a branch or subsidiary of a non-resident bank. Plays an intermediary role between the non-resident borrowers and lenders. In India, these are found in special economic zones. Okay. The offshore banking units allowed to accept deposit from foreign banks, from some onshore banks that permit deposits and other offshore banking units. And the OBU may make loans to the non-resident companies as well. They do not carry retail business, but generally provide wholesale banking services, project financing, syndicated loans, issue of short-term and medium-term instruments, etc. Then, green banking. This is the concept of green banking, which has emerged and recognized as an important strategy to address the sustainable development concerns, creating awareness among people about environmental responsibility. The green banking generally has the two dimensions. First, the way the banking business is being done. Is it paperless or not? The second dimension relates to where the bank puts its money. The green banking entails banks to encourage the environmental friendly investments, give lending priority to those industries which have already turned green or are trying to go green, and thereby help to restore the natural environment. The green banking generally refers to how environmentally friendly the bank is and how committed to green and ethical policies the banks are. Note, the green banking could be called as the method of finance by the banks to make the industries grow green and in the process restore the natural environment. This concept of green banking will be mutually beneficial to banks, industries, and economy. Like you can say, green banking is also the kind of banking, but the banks which are comes under the green banking mainly involved in granting the credit facilities and doing the banking business in order to provide the environmental friendly responsibilities. Okay, so green banking is not only giving the business to the banks, but it is also enhancing the environmental commitment of industries and economy. So that's why it is green and ethical policy. Okay. Now let's move forward. Retail banking. Let's have a look on this. So we could say retail banking refers to the dealing of commercial banks with individual customers. Like you can say, they are not dealing with the business and the corporates and all. They are dealing with the individual customer, both on liabilities and asset sides of the balance sheet. Fixed, current saving accounts on the liability sides, mortgages, loans like the personal, housing, auto, educational, whatever the loan is. This is on the asset sides. Okay. And are more important of the products offered by the bank. Related ancillary services, including the credit cards or depository services. Okay. Retail banking sectors characterized by the three basic characteristics. First, multiple products. deposit, credit cards, insurance, investment, and securities. Second, multiple channels of distributions, call center, branch, internet, and kiosk. Third, multiple customer groups, consumer, small business, and corporates. Okay. Wholesale banking. The wholesale banking refers to the banking services happens between the merchant banks and other financial institutions. In this, the bank deals with larger clients such as large corporations and other banks. Refers to doing banking business with the industrial and business entities, mostly corporates and trading houses, including the multinationals, domestic business houses, and prime public sector. It is also called the corporate banking because generally it is dealing with the large size of customers, not only the individual customers. It is the borrowing and lending of funds to other banks, large multinationals, and even government agencies. Focuses on corporate, therefore companies, firms, proprietorship concerns, public sector, institutions, societies, trusts, and clubs. Okay. Then universal banking. What does it mean? Universal banking is a multi-purpose and multifunctional financial supermarket. A company offering a wide range of financial services. Examples are stock, insurance, and real estate brokerage, providing both banking and financial services through a single window. As per the World Bank, in universal banking, large banks operate extensive network of branches, provided many different services, holding several claims on firms, including the equity and debt, and participate directly in the corporate governance of firms that rely on the banks for funding or as insurance underwriters. Universal banking, popular in development countries, offers one-stop shopping for all financial products and services. A wide range of financial services such as commercial banking, investment banking, development banking, and insurance are available to the customer under one roof. Investment products like saving accounts, certificates of deposits, mutual funds, credit cards, and loans are within the reach of the customer. Like you can say, if the customer is looking for the wholesale banking, retail banking, or investment banking, so he could have the access of all the three banking areas just from one universal banking. Okay. Thereafter, the Islamic banking. What does it mean? So we know Islam is a religion, and Islam religion is basically work on the Sharia law. So we could say the Islamic or Sharia banking is a financial system based on the principles of not charging interest, which is prohibited under Islam. It means that you could take the loan from the Islamic banks, but you are not required to pay any kind of interest on the loan, which is generally happen in the banks. Like if you go to the bank, you lend out some money from the bank, then you always know you are required to give some interest rate to the bank, right? Which is chargeable. Under the Islamic banking, this is not the right way of earning the money. It means Sharia banking prohibits the charging of interest. Islamic banking is a banking system in accordance with the Sharia. In Islam, money has no intrinsic value, therefore, cannot be sold at a profit and permitted to be used as per Sharia only. The Islamic law or Sharia prohibits the paying any fee for renting of money called riba for specific periods of time. Then the merchant banking we have. What does it actually mean? Merchant banking is a combination of banking and the consultancy services. Provides consultancy to its clients for financial, marketing, managerial, and legal matters. It means banking services are being provided. Instead of banking services, also financial, marketing, managerial, and legal matters are to be concerned. Consultancy means to provide the advice, guidance, and service for a fee. The Ministry of Finance in India defines the merchant banker as any person who is engaged in the business of issue management, either by making arrangements regarding the selling, buying, or subscribing to the securities as manager, consultant, advisor in relation to such an issue management. In general, the merchant banks are the financial institution provides financial services, solutions, and advice to the corporate houses. After finishing the types of banking activities, now what we are going to do, we are going to talk about the types of banks in India. Broadly, banks are classified either into the commercial banks or a central bank. They are also classified as scheduled and non-scheduled banks. First, scheduled and non-scheduled banks. Under the Reserve Bank of India Act 1949, banks were classified as scheduled and non-scheduled banks. Scheduled banks are those which are entered in the second schedule of RBI Act 1939. Okay, kindly correct it. It is 1934. So does the 1934. Okay. So scheduled banks are those banks which are entered in the second schedule of Reserve Bank of India Act 1934. These are those banks which are having a paid up capital and reserves of aggregate value of not less than 5 lakhs. Okay. So does all the commercial banks, regional banks, state cooperative banks. These all are the scheduled banks. Non-scheduled banks are those banks whose total paid up capital is less than 5 lakhs, and RBI has no specific control over these banks because these are not comes under the jurisdiction of the Reserve Bank of India. These banks are not included in the second schedule of RBI Act 1934. Note, in each country there exists a central bank that controls the money supply and monetary policy of that country. It also acts as a banker to the other banks and lender of last resort. In India, Reserve Bank of India is central bank which decided the monetary policy and does the currency flow. Now the commercial banks we have. These are the banks which are doing the banking businesses. Therefore, dealing with general people, accepting deposits from making loans to the large number of household and firms. The process of accepting deposits and lending results in creating the flow of money in the economy. Examples of commercial banks are State Bank of India, Punjab National Bank, Investment Credit and Industries Corporation of India, Housing Development and Finance Corporation, Hong Kong Shanghai Banking Corporation, etc. Scheduled commercial banks account for a major proportion of the business of the scheduled banks. The scheduled commercial banks in India categorized based on their ownership and for their nature of operations. Like if we talk about the types of scheduled commercial banks. So the first is the public sector banks. The public sector banks are those banks in which majority stake is held by the government of India. Okay. Private sector banks. The banks where majority of share capital of the bank held by the private individuals. These banks registered at companies with limited liability. Examples are ICICI Bank, Axis Bank, HDFC, etc. Foreign banks. Registered with and have their headquarters in a foreign country, but operate their branches in our country. Examples are HSBC, Citibank, Standard Chartered Bank, etc. Regional rural banks, in short known as RRBs. These were established under the provisions of an ordinance promulgated on the 26th September 1975 and the RBI Act 1976 with an objective to ensure the sufficient institutional credit for agriculture and other rural sectors. The area of operation of RRB is limited to the area as notified by the Government of India, covering one or more districts in the state. These are jointly owned by the Government of India, concerned state government in which it is lies. Suppose if it is lies in the Uttar Pradesh, then the UP government will be there. If it is in Tamil Nadu, Tamil Nadu government will be there. If it's in Haryana, Haryana government will be there. So where the bank is situated, in which state, the government of that concerned state will have some stakes in this. And obviously the sponsor bank. The issued capital of RRB is shared by the owners, like 50% stake belong to the Government of India, 15% stake belong to the concerned state government, 35% stake belong to the sponsor bank. Prathama Bank is the first regional bank which located in the city of Muradabad in Uttar Pradesh. Then the development banks. These are specialized financial institutions formed to promote the economic development in the country. These banks provide the medium-term and long-term loans to the entrepreneurs at relatively low rate of interest rates. Then cooperative banks. Cooperative banks organized under the provisions of Cooperative Societies Law of the state. These banks were originally set up in India to provide the credit to the farmers at cheaper rates. However, the cooperative banks functions also in the urban sector. It is a financial entity, belongs to its member, who are at the same time the owners and the customers of their bank. These banks generally provide their members with a wide range of banking and financial services like loans, deposits, banking accounts, etc. These banks are the primary financiers of the agriculture activities, some small scale industries and self-employed workers. Cooperative banks functions on the basis of no profit, no loss. Okay. Anyona Cooperative Bank Limited was the first cooperative bank in India which opened in the city of Vadodara in Gujarat. Then the cooperative banking structure in India divided into the following 5 main categories: primary urban cooperative bank, primary agriculture credit societies, district central cooperative banks, state cooperative banks, and the land development banks. Thereafter, the specialized banks. So the banks which cater to the requirements and provide all over support for setting up business in specific areas of activity can be called as a specialized bank. Exim Bank, SIDBI, and NABARD are example of such banks. Like these are engaged in some specific area of activities and thus they call the specialized bank. Total number of banks in India as per the IBA, Indian Bank Association website. Okay. Please remember that this figure is not static, it is dynamic to be changed. So here we have finished the summary. Sorry, topic, now it's part for the summary. So we have talked about the banking overview, like para-banking activities, types of banks, commercial banks, specialized banks, banking functions, retail banking, wholesale banking, universal banking, Islamic banking, merchant banking, offshore banking, green banking, current landscape of banks and all. So with this, we have finished the part 1. It is requested and advisable to all of you kindly revise the lecture in the proper manner before you go for the part 2. So with this note, we are going to end this lecture and thank you.